Welcome to the Widowed Parent Podcast with your host, Jenny Lisk.
Hey everyone, it's Jenny Lisk, and this is episode 113 of the Widowed Parent Podcast. So I had such a great discussion with Stacy Francis for this episode. And Stacy is a certified financial planner who specializes in working with women going through transitions, including becoming widowed. I invited her on the show because I think this is such an important topic, and it is really helpful to be able to ask an expert our questions about money and taxes and Social Security. Some of the topics that Stacy and I discuss include thinking about the first tax return as a widowed person and some differences to know about the various filing statuses, tax breaks for widows that are important to know about, why life insurance is an important financial tool, and also the importance of planning for retirement, Social Security benefits that widowed people with children are eligible for, the free guides and checklists that Stacy has available on her website, and her nonprofit, Savvy Ladies, which offers free financial advice and services for women who need it, and what is important to know and ask when choosing a financial planner. I hope you enjoy my discussion with Stacy Francis. Hey there, you may have heard about my book, Future Widow. What's it about, you ask? Well, first, my young husband started feeling dizzy and stopped making sense. And the next thing I knew, I was a widowed parent, desperately wanting to know how exactly do you raise grieving kids anyway? And that's what Future Widow is about. In the book, which has endorsements from many prominent children's grief experts, my family's story is told as a memoir, but I've explicitly worked in themes about parenting grieving kids to make it broadly applicable, including to those who are becoming widowed parents today. Readers have said it's captivating, that they couldn't put it down, that it's an honest and hopeful read, and that it's a must-read for anyone facing loss. Find Future Widow at futurewidowbook.com. That's futurewidowbook.com. And thank you. My guest today is Stacy Francis. Stacy is a certified financial planner, and she is a nationally recognized financial expert and the president and CEO of Francis Financial, Inc. She has been featured on CNBC, Forbes, Kiplinger, and the Wall Street Journal. She's also a certified grief recovery specialist. While some women have always been in the driver's seat when it comes to the family's finances, Stacy knows that for others, this role is new territory. Stacy provides advice to women going through transitions, including widowhood. She is also the founder of Savvy Ladies, which is a nonprofit that has provided free personal finance education and resources to over 15,000 women. She's joining us today from New York City. Stacy, welcome to the show.
Thank you so much. The Big Apple says hello. It's cold here, but, hopefully going to warm up this spring. So
yes. Well, I was actually there as we were chatting before. I was there last week as we're recording for my birthday. And the first day we were there, it was freezing. It was like cold. It was 28 or something during the day and windy and really, really cold. But every day we were there, it got just a little bit warmer. So it was a lovely time, and I'm jealous that you're there.
well, I have to say I love it, and I love that you saw Hamilton. For all of those you listening, come visit us in New York. We're really friendly. We've got a great Broadway. We've got great stuff coming on here. So, so I'm excited to talk about. Boy, we have so many things on the docket today. Everything from taxes to financial planning to investing. We've got a lot of good stuff today.
Yeah, absolutely. And I've really been looking forward to this. I do get a lot of questions. I have a lot of listeners write in and ask me different things. And fairly often they ask something in the kind of financial related umbrella of topics. So I'm very glad to have you on here and have a chance to ask you some questions and also, of course, encourage people to get in touch with you if they have more questions and, interested in what we talk about or other related things. But we'll get to that at the end. So as we're talking here, it's March. March means that we next have April, and April means
tax season.
Yes. All right.
Tax returns.
And I still need to do mine. And I think a lot of people may be thinking about taxes right now. So let's just jump right in with talking first about taxes. And I'm thinking about especially that first tax return as a widowed person, because somebody may have been filing taxes for years or maybe longer, married filing jointly, maybe with a few dependents, you
Yeah.
know, kind of things stay somewhat the same from year to year, depending on, you know, what's going on in your family. And then everything changes.
Yep. Yeah. Everything changes. And, you know, quite honestly, filing your own tax return on your own, it might have been years and years and years, maybe even decades since you've done that. And so it can be very overwhelming. And, you know, if anything, for most widows and widowers, it's money is tight. So there's also the additive incentive of doing it right and trying to pay as little in taxes as possible. And so one of the biggest questions, at least that we get, is what should be my filing status? Before it was married, filing jointly, or maybe even married, filing separately. What do I do now? Do I file essentially head of household? Do I file single? Do I file qualifying widow? What is the best one for me? And it can be complicated. You know, it can be a little bit complicated. And go ahead.
Well, I was just thinking, before you get to that, is there a question before, like, okay, right now it's 2022, so we'd be filing our 2021 taxes. If the person died during 2021, so that you were married a part of the year and then you were widowed a part of the year, is that a married tax year, or is that some other new status tax year?
A great question. And so the IRS looks at whether or not you are married and what you should file as of December 31st, 2021. So if your spouse passed away before that date, then you would be looking at single, head of household, or a widower, qualifying widow or widower. If they passed away in beginning of 2022, then for 2021, you're going to be doing married filing jointly.
Okay, so if they died anytime during 2021 tax year, 2021 gets the new change of status, whatever that may be.
Exactly.
Gotcha.
Yeah,
but
and
if
it's
they
actually
died in January or before you filed your taxes, but during this year, then we wait till next year to change.
Exactly. And it's the same rules for divorce. So if you get divorced partway through a year, then whatever you are on the last day of the year, if you're single or you're married, that's how you file.
Gotcha. Okay. So now we're talking about a new tax status. So you mentioned a few different types. So how do you know what's what?
So I'm just going to break down kind of the best way you can file to the essentially the worst, and not that anything is the worst, but qualifying widow or widower, if you can file upon that status, is where you save the most money. And you save the most money in two different areas. Number one, the standard deduction, so the amount of money that you can deduct before you would have to pay taxes, is a lot higher. It's $25,900. That's essentially, that's significantly higher, almost double what you would get if you were just filing single.
Gotcha.
As single, it's $12,950, and head of household, which I'll explain what that is $19,400. So you can see there's a range, and qualifying widower or widow essentially gets to deduct the most, paying less in taxes.
Qualified sounds like an important word that a lot hinges on. So what does that mean here?
Yeah, so you picked up on the word, Jenny. Not everybody gets to do that. There's a couple requirements. Number one, your spouse must have died in the last 2 years. So if they died 5 years ago, you're no longer able to do that. Secondly, you have not remarried. And third, and this is the one that usually catches most people up, you have a dependent. And a dependent could be, a child living with you that you give 50% of their support. That's pretty easy. But you might also have adopted child, maybe a stepchild that you provide more than 50% of the income for. So those are the three things that you need, as again, it has to have passed away in the last 2 years, that you haven't remarried, and that you have some type of child that you are supporting.
Okay, so since many of my listeners are widowed parents, they probably are likely, at least they should be asking if they can qualify for this, and they may be likely to.
Yeah, most likely they can. If you have kids, most likely you can qualify for this. Now, the other benefit, other than that much bigger standard deduction, is that the tax bracket that you're in is a lot lower. So if you can almost think of the tax brackets as like buckets, essentially more of your money is going to be taxed at the bucket with lower income tax. So that really helps you as well. It means that you pay less to Uncle Sam and more goes in your pocket for every dollar that you earn.
Sure.
So it does make sense. So definitely talk to your accountant. Can I file this way? Because if you can, the amount that you'll save is astronomical. And I know that taxes, at least for me, I remember studying taxes, boy, for the CFP, probably it would have been 23 years ago. And I felt like it was the most boring course of all of them. But Jenny, what made me excited is I looked at it almost as a competition of how much money can I save without breaking the law, which I do want to make sure everybody hears that, without breaking the law.
Right.
And so if you can think about it that way too, all of a sudden filing your taxes can be much more interesting.
Gotcha.
Saving money.
Yeah, saving money is a good thing. All right, so we got qualifying widow and widower status. If you can't qualify for that, you mentioned head of household. So what's that all about?
Yeah. So there are similar rules. Head of household, you cannot have remarried. You also need to have some type of a dependent. It can be a child, but it also could be a parent. It could be that you are in that sandwich generation, you have kids, and then also you have parents that you're supporting, or it could be that your kids are off and have flown the nest and are fully independent, but you're still supporting your parents or a sister or a brother or some other type of relative where you are providing 50% or more of the support. And typically the head of household, people would do that filing status 2 years after their spouse has passed away. So they would try and do qualifying widower for those first 2 years, and then they would go to head of household.
Gotcha.
Same thing with head of household. You have a much higher standard deduction, which is good, much higher than single. And the exact number, and this changes every year. So that's why you guys can't see this, but I'm looking at a piece of paper to remind me. So that standard deduction for head of household is $19,400. And also your income is taxed at a lower rate too.
Okay.
Now, if you can't do any of them, it's single, right? You can do single. Single is if you have no dependents. If you've gotten remarried and you don't have any dependents that you're caring for, and the amount that you get for your standard deduction is $12,950, and you pay a little bit more because your tax brackets are a little higher.
Gotcha. Okay.
Yep.
And if the qualified widower status, you can hold that for 2 years. And then as long as you still have dependents, you can switch to the head of household. Is that time limited, or can you hang on to that status as long as you still have those dependents and not get remarried?
Yeah, boy, Jenny, I'm glad you brought that up because, you can hang on to that head of household until you no longer have dependents. And I guess what I really want to just stress here too is that we think of dependents in a very finite way of children, but so many parents are now supporting their elderly parents, or maybe a sister or a brother. Know that that's considered a dependent as well. You just have to prove that you're giving them 50% or more of their support, their living expenses.
Okay. All right. So it's good to be thinking about these things and asking these questions and thinking about what you might qualify for. Are there some tax breaks for widowed people that we should know about besides the different standard deductions you've mentioned and all that? Is there anything else we should be thinking about in that regard?
There is. It's something called a step up in basis. And it sounds a lot fancier than it really is. I'll use the example of your house. For a lot of widows or widowers, they decide to eventually sell their house. Hopefully not the first year, because you want to take some time before you would make such a big decision like that. But let's say, 2 years down the line. And I'm just going to use a house that was bought for $500,000 many years ago. And if you were to sell it today, you would be able to get $1 million, which is quite a nice hefty
increase.
increase. Well, unfortunately, you would owe a good amount in taxes. That's a $500,000 gain.
Mm.
But there's a way that you actually don't have to owe anything in taxes. And the first piece is that if you co-owned that house together and your spouse passes away, you get what's called that step up in basis. So you get to have their portion that is then given to you. Instead of the basis being $250,000,
half of the purchase price.
Half of the purchase price, their basis is $500,000. And your basis, remember, half of the purchase price was $250,000.
Mm-hmm.
So you're selling it for $1 million, but now your new basis is $750,000. $500,000 from your deceased spouse because you got that step up and the value as of the date of death, half of that.
Mm-hmm.
And then the $250,000 that you originally had when you previously bought it. So your gain is $250,000
instead of $500,000.
Exactly. And Jenny, there's even another step. Because it's your primary home, the government gives you an exemption of $250,000.
Oh, look at that.
When you sell your primary home. So we've just gone from owing potentially taxes on $500,000, which would be a huge tax bite, to not having any taxes due at all.
Wow.
So things to think about, and it's not just real estate. If you co-own an investment account, that too, co-own a real estate commercial property or something like that.
Investment property or something. So let me ask you something though. I wonder if you need to do something to like record what the stepped up basis would be on their death date, or is there some way like, so now my husband died 6 years ago. So if I was going to sell, I don't know off the top of my head, and I don't have on paper what the house was hypothetically worth 6 years ago. Right. But it's increased a lot. I'm in Seattle. So prices are going through the roof. Right.
Yeah.
So I wonder, like, can you, or do you have to, or should you somehow figure out what it was worth on the day they died? In this case, 6 years ago.
So there can be a couple different ways that you might be able to get that information pretty easily. The first is that if you worked with an estate planning attorney to probate the estate to help, essentially with the actual distributing of assets, all that information would have been recorded. What the value of all the assets were, who the beneficiary was. And so your estate planning attorney could definitely help you with that, because to do that work, they would have needed to do that.
Gotcha.
And the other thing you can do is, to go and try and find a statement back when your husband passed away for the investment account. Maybe you can go online to see, what the history of the value that the property might have been. A lot of people can do that right online as well. Just having some piece of documentation just to kind of earmark and show,
sure,
this is what it was worth. This is what it was worth.
Well, that's really good to know that we need to be looking at that and asking those questions at least, and trying to figure out, because it could potentially save an awful lot of taxes if we can document that. Okay. All right. Good. Another thing that I was wondering about that I sometimes get questions about, how does life insurance come into play at tax time? If somebody did receive a life insurance payout as a beneficiary, what does that mean?
The good news about life insurance is that it doesn't create any taxes. So
nice.
It comes directly to you. It's different than, let's say, taking money out of an IRA. If you take money out of an IRA, you're taxed on it like it came to you in your paycheck. Social Security, Medicare, federal, and then it could be even state and city, depending on where you live. But life insurance, that's not the case. And life insurance is one of the best assets out there because it's also transferred to the recipient, whoever the beneficiary is. It can be transferred in as little as a week. So it really has a huge amount of impact on the family who all of a sudden has funeral expenses, bills to be paid, maybe an income that has stopped.
Right.
It can be very frightening, and life insurance is really, really powerful. And I would just say that if you're now a single parent, I would look into life insurance for you to make sure that your kids are going to be taken care of if God forbid something happened to you. But know that you don't want life insurance to pay out directly to them. I have a 16-year-old and a 13-year-old, and they're really smart kids. They're already investing in the stock market. I'm super proud of them. But if they each got $500,000 because I passed away, I can't guarantee to you, Jenny, that my son would not go out and buy a Tesla, because in fact he would probably buy the plaid Tesla. Not so good. And my daughter would probably spend at least 500,000 in Robux when she's playing Roblox. So
I hear you.
making sure that you've done your estate planning and you've updated everything so that the money that you leave to the kids goes to a trust on their behalf, and that you've picked a trustee, someone that could make sure that my son doesn't convince them to let them have a big distribution for a plaid Tesla, things like that.
Yeah. Okay. That makes a lot of sense. So, well, you mentioned Social Security, but actually, before I ask about that, before we leave the tax topic, are there some other pitfalls we should be looking out for, or questions we should be asking, or things that should be on our mind as we think about taxes as widowed people?
Yeah, I would say, taxes, the more money you can save, the better. For a lot of individuals, their standard of living drops significantly after the loss of their spouse because often income goes down. So paying attention to your taxes is really important, as well as paying attention to the life insurance proceeds that you receive, or the investment accounts that might come to your name. We just talked about leaving money to your kids, and I'm going to say something that is 180 opposite of what I just said. Ideally, that money, the life insurance proceeds, the investment account, should go towards you. They should go towards beefing up your emergency fund, which is 3 to 6 months of your living expenses, beefing up your retirement, and putting you on track to long-term financial security. Where I worry that some of us put money, parents that are very well-meaning, is towards the kids' college education. And I love my kids desperately, and I want to be able to afford their college. But if it came down to them having to take out loans, or me not being able to afford retirement, make sure that you're putting your money towards your retirement first, because no one's going to give you a loan for retirement. And the last thing you want to do is become a burden to your own children, of them feeling like they have to take care of you, because trust me, they're worried about you. The last thing you want is them to then be worried about you financially. Sure.
That makes sense. Okay. All right. Good. Thank you for mentioning that. Okay. So Social Security.
Yep.
So I think, when you hear the word Social Security, you usually think about people who are older and retired. And I think there are a lot of other aspects to Social Security, some of which may come into play here for people who are your age, my age, widowed with kids. Tell us a little bit about the different types of Social Security that we should know about, or the different types of benefits that we might need to be looking at.
Yeah, so the benefit that most people know is what's called the widow's spousal benefit, where at age 60, so instead of 62 being that first year you can collect, you can actually collect sooner at age 60, and you get 100% of your spouse's benefit if they passed away.
Okay.
But if you have children, so young children, you can actually get a benefit now. And this is really powerful because each of your children can receive that benefit that can help with living expenses. It can go towards their college savings. It could go towards, other education expenses as well. So make sure that you talk to your financial advisor about what Social Security benefits are we eligible for, because I'm a parent with dependent children. Because most likely you're going to be able to get a benefit now for Social Security, and know that it doesn't reduce your benefit in the future. It has no impact. So you might as well get that, and it can be a big number. Something that I will just say, though, that I have heard from kids who have lost a parent, getting that check on a monthly basis can be very heart-wrenching as a reminder that they've lost their parent. So I was talking with one mom, and what she had happen, which made her children feel much better, is she had that money go to an account in their name, direct deposited from Social Security, and every once a year would show them what that account is and talk about what would dad have wanted you to use this for? Is there something special? And it was a much healthier way of looking at that money than seeing it on a monthly basis. Does that make sense?
Yeah. Interesting. Yeah, that does make sense. And I think that also, though, the money can go to the surviving parent, like
exactly
on behalf of the children, because you're paying for their food and their house and their soccer clothes and everything else.
Yeah, and so that's another option of what you can do too. It's meant to help you, because most parents, when they're on their own, their income has gone down, and their expenses usually don't go down very significantly.
Right. Okay. All right. Well, that makes sense. And I recall that there was potentially, that you're talking about children's benefits, but potentially like a surviving spouse benefit that might have some income dependency issues or something. Can you tell us about that?
Yeah, so there's a surviving spouse benefit too, and actually there's you can get some more information. I wrote an article on this because I know that this is quite complicated. It's in Kiplinger's, as far as what you should be looking at. So you can just look at Kiplinger's Social Security death of a spouse, and you can learn a little bit more all about that. But the kids benefit stops when the child reaches age 18, unless they are disabled, or you can prove that they're a student. That might be another way. But you can also get a survivor's benefit as well, and it actually doesn't even matter if your spouse worked long enough to qualify for Social Security on their own. It could be that they didn't. So typically it's 10 years to be able to qualify to get a full Social Security benefit. And this year that you can receive the survivor's benefit, you can get this even if they haven't put in those full 10 years. So that's another great option for someone as well.
What I remember them telling me, because at the time I was employed, for a company with a regular salary, that would like zero out my, like, I could have gotten it, except that my income like made me not eligible. And somehow the extra went into the kids' amounts or something. I don't know. I don't remember exactly. It's been a while. Does this ring a bell at all?
Well, it's extremely complicated. I will just say that. So I think the best thing to do is to work with a financial advisor, and also Social Security, if you call them, they're very helpful. And if the person you're talking to is not helpful, hang up the phone and call again. One out of two, you should get someone that's very helpful.
Sure.
As far as the one thing to know is that if you're already claiming Social Security, you can't claim your benefit plus also your deceased spouses. So that is something where you have to be careful.
Oh, if you're old enough that you're already claiming your own benefit. Okay.
Yeah.
But most of my listeners probably are still not retirement age. Gotcha.
Exactly.
Okay.
Yeah.
And what if someone's like, let's say your spouse dies, you go to Social Security, you do everything, but then your financial situation changes. maybe you were working and now you're not, or you weren't working and now you are, or something. Like, can you, or should you, or do you have to go back and like change things with them? Or is it like one and done, whatever it was on the day they died, that's what it is, and you're out of luck?
Yeah, so normally it's based on their benefit, what you're able to collect. So if you all of a sudden are earning less money, it typically wouldn't change the benefit that you're entitled to. Often the benefit does go up on an annual basis. So there's, just as someone would be collecting when they're retired, usually the benefit goes up by a certain inflation rate. And how that inflation rate is decided upon is that Social Security decides that, all benefits are going to go up by, let's say, 2.7% this year. Or, all of them are going to go up by, X percentage.
Gotcha. Okay. Anything else on Social Security that we should talk about?
It's always good to get a copy of your Social Security and just see what benefit you'd be entitled to for your retirement. There's a good amount of time where we see that they've made a mistake and they don't have a year that you've been working, that you actually did work, so you didn't get credits for that. And you can just go to ssa.gov, Social Security Administration.gov. You can get it online. It's really easy to do, and it's a good way of just, again, seeing, what am I going to be eligible for at retirement age. And you can choose to get your benefit, or you can collect on your spouse's benefit. So you can choose which benefit ever is higher for you, but you can't collect on both.
Gotcha. Okay, so ssa.gov, is that also where we should go to start like thinking about calling somebody to ask some of these questions?
Exactly. And that's exactly where you can see what the survivor's benefit would look like for you, what the benefits might look like for your kids. Exactly.
Gotcha. Okay. And there was another question on the tip of my tongue, and it was about, I know. Is this, like, calling Social Security, is this something we need to do quickly after someone dies? If we wait, does it cause us problems? What should we be thinking about in that regard?
That's a great question. I wrote a guide that parcels out what you need to do now versus in a month versus 3 months versus, could even be 12 months from now. Social Security is not the number one. You can call them within, I would say, 3 to 4 weeks, for the reason that they do immediate payout. It's not a lot of money, but $255 that can go towards something. And it also puts the wheels in motion to start to receive the survivor benefit, Social Security. So, it does typically retroactively backdate from the date of death, but if you want to receive that money sooner than later and cash flow is tight, that would be something that you would want to do sooner than later.
Okay. And it sounds like that if you did have a life insurance policy, that might be one of your first calls, because that could be quick, you said.
Yeah, life insurance policies are typically something you want to call in the first week, especially if you're going to have large expenses, which unfortunately, final resting expenses can be very, very expensive.
This would be a good time actually to remind people that and I don't have the details in front of me, but the government, and for my listeners in the US, passed something, I think it was last year, for COVID-related deaths, that they would reimburse up to, I feel like it was like $9,000 worth of funeral expenses. I'll put the link in the show notes. I can't remember off the top of my head what it was, but it's specifically COVID-related deaths and funeral expenses. So I think that's a good thing to make sure people know about, if that is relevant to their situation. Yeah.
And for all of you listening, Jenny, I'll make sure that I send you the link to our guide. It's a free guide, so you can go ahead and add that to, the show notes as well.
Yeah, please do. And actually, I did want to ask you about that. I think, is it called Financial Help for Widows, a complete resource guide?
Exactly. Yeah.
Okay. So
exactly.
tell us a little bit about what kind of information is in there.
Yeah, it's a really helpful guide. It's what I spoke about as far as putting timeframes on the things you need to do, and what needs to be done first, giving you checklists so that it's not quite so overwhelming. And then also giving you the information of like, who do you ask for at Social Security, talking more about these benefits, what you're entitled to. We also include information about filing your taxes for the first time, what we've talked about. Are you qualified widower, head of household, or should you file a single? The other piece that we include in there is how to put together a team. And that team is an estate planning attorney. I would definitely say a grief coach or a therapist, potentially a financial person too, if you don't already have someone that you can trust. And then the third piece is really important. So many of the people that we work with, they put the air mask that drops down from the airplane on everyone else, supporting children, possibly supporting friends or parents, and not able to really support themselves and find the time to be able to take care of themselves. And
Right.
I just see so many moms and dads who are so burned out. I was just talking to a friend, and her husband passed away about, it's now been 15 months. And she said, the first year I was taking care of so many people that I just was trying to survive. And I couldn't be there for my kids in the way I really wished I had been able to. And I think a lot of people feel that way.
Yeah.
It really can be difficult. And I'm a certified grief recovery coach, and I actually don't do that coaching work. There are great people that do full time, but that training is so helpful, even with the financial side, because so much of this is all intertwined.
Right. Yeah, that makes a lot of sense. Okay, I want to ask you in a second, in the few minutes we have left, about finding a financial advisor, but I was just thinking about your guide. It sounds really helpful. I'm going to put a link in the show notes. Again, it's Financial Help for Widows, a complete resource guide. And I'm thinking this is one of these things, everybody listening is probably thinking, I've had all these people asking, how can I help? Let me know if I can do anything to help. It seems like you could pick one of your trusted friends who's asking how they can help and say, can you please go download this guide and read it and net out for me what I need to do first, and, try to pull in some help with some of those logistics. Cause like you said, it can be overwhelming.
Yeah, Jenny, I love that you're saying that, because one of the biggest challenges is everybody comes out of the woodwork of, let me know how I can help. And you're looking at them like, I can't even balance my checkbook, let alone know where I put my keys. I have no clue what to tell you. Right. And I agree, the Widow's Guide can be one piece where they can read through and help you. But I would say even one step further. Ask a friend to go with you to the estate planning attorney. Ask a friend to go with you to see the financial advisor. Don't go on your own, and have them be your right-hand person to help you. And I think about it, when my mom was diagnosed with cancer, we knew that it wasn't good. And I went to the doctor's appointment with her with a pen and paper. And thank goodness I did, because I wrote everything down, because her hearing her diagnosis, it was too much. She couldn't remember. And, we talk about brain fog. Brain fog is real. And it's not just something people talk about. It's a physical symptom of traumatic loss. And so making sure that you have people there to support and help you are really important. And particularly the finances. And I just feel like it's really a shame, because you lose your spouse, and then you have this avalanche of financial decisions that you have to make. Right. And so making sure that you have someone that you can trust to help you is really important.
Right. Okay, good. All right. Thank you. Well, so speaking of having somebody help you, when you start thinking about getting a financial advisor, now listeners can't see him doing air quotes. Financial advisor seems like it could be all kinds of things, right?
Yeah.
And I was reading on, maybe, I don't know, like advisors, brokers, broker dealers, certified financial planners, chartered financial analysts, certified investment managers, blah, 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 blah. Like, so how do you, what should we know, and how do we start this process? That's important to know.
Yeah, there's hundreds of thousands of financial advisors, but there are only 3,800 that have these three things that you need to know. Number one, they're fee only, which means that they're not going to sell you an annuity and make a commission, sell you life insurance and make a commission. That literally they work with you and they don't get any commissions. You pay them directly.
Okay, so no matter, it's kind of like a doctor. You pay them to perform, to have a meeting or a surgery or whatever they're doing for you, but they're not taking a cut of any activity that they're.
Exactly, they're not taking a cut of putting someone on, Prozac versus Zoloft, right? And you don't want that. You don't want someone getting a cut by selling you this mutual fund or that one. Right? Second thing, you want a fiduciary. A fiduciary means that by law, they have to put your interests ahead of their own. So they have to do what's best for you. That's number two. And number three, you want someone who's independent. So someone who has the world's oyster of mutual funds to choose for you versus working for a Merrill Lynch or a Morgan Stanley, although those are great companies. They have products. And I've worked at these companies. Your compensation goes up higher if you sell the products of that company. So look for fee only, look for fiduciary, and look for independent. And there are financial advisors. You can go to napfa.org, N as in Nancy, A as in Apple, P as in Paul, F as in Frank, A as in Apple, napfa.org. And it's the largest group of these people, and some of them work hourly. You can meet with them for a few hours. Others, like myself, we work with someone ongoing. And so we charge them as a percentage of the assets that we're managing for them. So people charge retainers, almost like a subscription model that you would be paying to your gym. You can work with an advisor. So the good news is that whoever you're looking for, whatever your financial situation is, there's a great financial advisor out there. And I know that sometimes we're not the best fit, and that's okay. So if anyone wants to call me and I can guide them towards the advisors that I know that work nationally that are really, really good, that I really trust, I'm totally happy to do that.
Well, you mentioned working nationally. So and we mentioned at the top that you're in New York. So do you only work with people in New York City or New York State, or can you work with people out of state? How does that part of it work?
It's a great question. We work all over the United States. We actually work outside of the United States too. And the reason why we have a much broader scope is that we're known for two things. We're known for working with people through divorce and after, and we're known for working with people who have lost a spouse. And so it's quite a unique specialty. And so we have people who reach out to us who are looking specifically for that then reach out to us.
Okay. I didn't know because how some things like, banking is regulated within states, I think, or at least, I can't, and so doctors and therapists can only practice in the state they're licensed in and things like that. So, but that sounds like that's not an issue in terms of
no,
engaging you.
At Francis Financial, we work with people all over. And, again, there are some advisors that can only work in their state. They typically tend to be a little smaller. But again, there's always an advisor for everyone. There really is. And if you're out there and you're talking to someone and the pit of your stomach, it just doesn't feel right, honor that and know that, that might not be the best person for you, because you are going to be talking to your advisor about some things that maybe you don't even talk to your own family members about. Right. And so that's really important. We have clients who, will say, I would never tell anyone this, but I really want to get a facelift. And can we put that in my financial plan? Can I afford it?
Right.
And there's no judgment, that sounds great.
Right.
Let's make that happen for you.
Right.
Whatever that might be.
Cool.
Yeah.
That makes sense. So that reminds me, how often, should someone be thinking they might be talking to their financial planner? Is it like you do a bunch of stuff in the beginning and then you never talk to them again? Or do you meet with them monthly for the next 50 years? Or like, how does that part of the relationship work?
Great question. In fact, I will send you, Jenny, a list that you can put in show notes. Questions to ask a financial advisor.
Oh, good.
it's really helpful to ask questions like this. How often am I going to meet with you? Do I get a financial plan? How often do you review my investments? Do we meet monthly? Do we meet quarterly? Do we meet once a year? I will say my humble opinion, that first year, you're going to be meeting quite a bit because hopefully that financial advisor is also helping you settle the estate and manage all the affairs of transferring assets, helping you change names of different accounts, updating beneficiaries for you, working with your estate planning attorney and your accountant, trying to do as much heavy lifting. After that, usually you might be meeting with them quarterly or twice a year is the typical that we see. But the most important thing is just making sure that they have an open door policy, that any questions that come up of, I'm looking to lease a car or should I buy, that you feel comfortable to reach out to them for even those small questions.
Right. Gotcha.
I think that's really important. Yeah, but the questions to ask a financial advisor will be really important. What licenses do you have? How much experience? What kind of clients do you work with? Do you work with clients like me? Does your team work with 100 clients or 1,000? Am I going to be just like a number, or are you actually going to know who I am, my children's name, and my dog?
Right.
So the things that are important.
Right. Terrific. Okay, good. Well, we'll put that in the show notes for sure. I think that'll be great. I did want to ask quickly if you could just tell us a little bit what Savvy Ladies is and how we can find it.
Yeah. So Savvy Ladies, I started before Francis Financial, and it's a beautiful nonprofit. We focus on supporting women, and a lot of the women who come to us are on their own. My grandmother was in an abusive marriage, and she felt financially trapped, and she shared with me that's what was the glue that unfortunately kept her in the marriage, and it actually became deadly, and she passed away because of it. And so at the age of 26, I started this charity in her honor so that no other woman would find herself financially vulnerable ever again. And all of our services are pro bono. And we match the women up with financial advisors. We have over 100 volunteers, and you can work one-on-one through our helpline. So if you go to savvyladies.org, you'll see both our helpline. Also, we have 50 different financial workshops, a lot of them for widows. And what does that look like? It's all pro bono, and know that we don't income test. My grandmother would not have qualified for a low income situation, but she desperately needed support and help. And we know that all women, whatever your bank account looks like or doesn't look like, have financial questions, especially if they are now on their own. And that's what Savvy Ladies is all about. So please reach out if you have any questions. We have fantastic advisors that, like myself, have 20, 30, 40 years of experience that are there to help you, answer questions about Social Security, to retirement, rolling over, his IRA into my IRA. Does that work? Whatever it might be, feel free to reach out. It's a great starting point.
Yeah. Okay. Terrific. So we'll put that Savvy Ladies link in the show notes, and then I want to make sure that it's clear that Francis Financial is separate, and that's your business where you are doing the financial. What do you call it? Financial advising, financial consulting.
Financial advising and wealth management. Yeah, gotcha. Exactly. You've got it.
So how do we find Francis Financial?
Yep. So you can go to Francis Financial, www.francisfinancial.com, and you can always email me, Stacey, STACY @francisfinancial.com, and happy to help and support in any way.
Terrific. And it's Francis, FRANCIS, right?
Yep.
Okay. And great. Well, we're just about out of time. I'll just ask you one wrap-up question here. If you could leave us with some parting thoughts, if you could say one thing to widowed parents about money, finances, and this whole topic, what would you say?
My parting advice, one of the worries that your kids have is if you're going to be okay financially. So talk about it. Talk about your financial situation. Talk about how you guys are working together, that everything's going to be okay. Not talking about it is where the worry comes from. And it's a great opportunity to raise financially, fiscally smart kids. And they care about you, and they just want to know they're going to be okay. So letting them know that is really important.
Yeah. Okay, terrific. Thank you. Well, my guest today is Stacy Francis, certified financial planner specializing in working with widowed people. Stacy, thank you so much for speaking with me today.
Thank you so much, Jenny. I love what you're doing. I absolutely love it.
I hope you enjoyed my interview with Stacy Francis as much as I did. You can find show notes and all the links at widowedparentpodcast.com. Look for episode 113. And shout out this week to my listeners in Oregon, and especially to my friends at the Dougie Center. Keep up the excellent work you guys are doing there in Portland, and also as a national leader in this field of childhood grief. And listeners, be sure to catch the Dougie Center's podcast, Grief Out Loud, which is hosted by my friend Janet DeCristofaro, who wrote the foreword to my book, Future Widow. And speaking of Future Widow, do remember to pick up your copy at futurewidowbook.com. And most importantly, reach out after you read it and let me know what you think. I'd love to hear from you. And if you're finding the Widowed Parent podcast helpful, please consider supporting the show. It's easy at buymeacoffee.com/widowedparent. As always, thank you for listening, and until next week, remember, you've got this.
Thank you for listening to the Widowed Parent Podcast with your host, Jenny Lisk. Connect with us on social media and at widowedparentpodcast.com.